Hi everybody, and welcome to TradeTheseStocks.com. This is going to be our first lesson, why traders fail, and there will be many more to follow. But the very first lesson that you have to understand as a new trader is you should never ever let one trade go against you to the point that you're going to lose your whole entire account. And I see many traders who go through this, and if you can get this lesson down and never allow yourself to let that happen, you should be okay as a trader. So this is going to be our very first lesson. If you can learn this lesson and actually stick to the methods, or at least the ideas that I'm going to teach you in this lesson, then you should be at least for the most part successful. And then of course you have to learn the patterns and the methodologies and so forth. However, this is the first lesson, so you have to understand stops and why certain traders fail. Now, trading is dangerous. Trading is a risky business. Everybody wants to do it, and yet 95% of people fail. And so, why is it that people want to trade? I mean, you have all these other options. You can have your salary job, where you have a fixed annual income. Most people have a wage job where they are paid by the hour. Then some people have commission jobs where they get a percentage of a certain sale. But the problem is that people in these sorts of jobs are limited to the income that they can receive. And that, for the most part, is what draws people to trading. When people want to trade, all they see is, I can make unlimited profits. And it's true that you can, to some extent, if you can build up your portfolio and have a methodology that you can stick to. Well, ultimately you should eventually reap very, very big rewards. But one problem is that trading has unlimited losses as well. If you do poorly on any of the other jobs, what's going to happen? You might lose your job, but you're not going to continue losing money to the point where everything is going to evaporate and you're going to lose everything like in trading. Okay, so if you do poorly on a salary job, you still get your same income. If you do poorly on a wage job, you still continue to be paid whatever amount per hour. Commission jobs, you might get a little bit less, but you still probably have some sort of base pay. But trading is really all or nothing. You can either make these great profits, or you can also make these great losses. And the problem is that everybody focuses on the profits and nobody's thinking about what they can lose. And so you have to get your mind around this idea that you can lose a lot of money as a trader. And so this precisely is the reason why this is your first lesson. Now let's say that there's a new trader by the name John, and he wants to trade. And most traders start out with a very small amount of money. Okay, so John actually had $25,000. Maybe you're starting out with $1,000 or $5,000 or whatever the minimum amount that your brokerage firm is asking of you. So John in this case has $25,000, and he is focused on these unlimited profits just like everybody else. So he's thinking, I can make all this money, but I'm not going to put in 5,000 because I'm not going to make much out of 5,000. Let me put all of this money that I have saved up, and because now I can make a lot. I can make a lot more money off of 25,000 than 5,000. So he goes all in, and he buys Citibank C, and he shorts it. So he's betting against this stock. So he goes short at 38.42 because he has this technical level right here. He has this double top right here. So he's thinking, well, this stock is into resistance. I'm going to short it at 38.42, and I'm going to go all in. I'm going to go short, and I'm going to take 650 shares of C. What happens next? the trade goes into his favor. Okay, so he shorted it at a very good level, and it keeps going down just like it should. Okay, and it makes it around this $34 area. So what's going on here? He could make a profit of about $2,800. But what happens is that he gets greedy. Sounds familiar? Most new traders do. They get greedy. And so he's saying, well, I see all these red bars. You know what? I'm going to let this ride. This can go a lot lower. Let me allow this trade to ride. I can make more. And believe me, most traders, when they're winning, they say that a lot. They say, I can make more. And what happens? Well, let's go to the future. So he shorted the stock here where the orange arrow is. It went into his favor. Instead of covering and taking a $2,800 profit, it goes against him. It goes up, and instead of taking a break-even stop like you should, he just continues riding this trade, okay? And now what was greed is turning into fear, because every single day this stock is going up, and it has a final surge here, and that is where 95% of people are going to cover their shorts. It's interesting, isn't it? That people, when they're fearful, they exit the trade when the trade is at its worst level. So he exits the trade at 47.46, and so what could have been a $2,800 profit is now a $5,900 loss. Okay? So he has lost a lot of money. He let this trade ride against him for a long, long time, hoping that eventually it could reverse. And most traders do that. They think, well, you know, this trade went up so much, eventually it's going to have to go down. And then it goes more, you know, it goes up even more. And then he says, he sees the first red candle and he says, well, eventually it's going to have to go down. But look at where you entered, and look at where you are here, or even here. Okay? So this is when fear comes in and he covers while he was waiting this whole entire time for his trade to actually turn in his favor. So let's do some math. Okay? So from this $25,000 investment, John has lost $5,800. That's about 24%. So now he has about $19,000 left. So he had a $25,000 investment, and now he has $19,000. Pretty sad, isn't it? But you want to know what's even worse? A lot of people are given a 4 times margin for intraday trading. And, you know, it's exactly what it is. I mean, this margin is given for intraday trading. And so if John had $25,000, his broker could have given him $100,000 in day trading power to trade during the day between, you know, 9:30 and 4, or maybe even after hours. So a lot of traders do this. They get this margin power, and they go into the trade thinking, well, I'm only going to be in the trade during the day. Okay? And so John could have been a trader just like this. So instead of investing $25,000, he could have invested $100,000. And do you know what happens? Well, these traders fail to close out the position the same day. And, you know, they're thinking, oh, I'm losing $200. I really don't want to lose $200. Let me hold this trade into tomorrow. Because if I hold it into tomorrow, you never know. Something might happen in the market, you know, that might actually swing the trade in my direction. So they hold the trade into tomorrow, and all of a sudden they get a margin call, and the broker's calling and saying, hey, listen, you need to put more money in. This 4-to-1 margin power is only intraday. So they make him deposit $25,000 or something to that effect. And so now John is in this position of $100,000, and he's also depositing money from his bank account to cover this margin call. Okay? So this is probably all he has, right? Because he is over leveraged. So imagine if he had held on to this position. Instead of having invested $25,000, he had invested $100,000, and he had held on to this position for all these days. What would have happened? Out of this $25,000 investment, remember now he is leveraged to $100,000, he would have lost over $23,000. So if he had used this leverage of $100,000, he would have lost 94% of his investment, and he would have only been left with $1,400, okay, about $1,500. Okay, I hope that none of you do this, because if you do, you are only one day removed from losing everything you have. But what a lot of people don't realize is that charts are not just pretty drawings of green and red, they are actual money. Okay, so when you say, well, you know, I only lost $1 more today, and then the next day you get another candle and it loses you $1 more per share, you have to understand that you are losing a lot more. Okay, and so for new traders, what I encourage you to do is translate your losses into percentages at first, so that you understand. It's very hard for me to explain to somebody when they are scalping, and scalping is, you know, maybe holding on to a trade for less than a minute or maybe even 2 minutes. But when people are scalping, and let's say they only go into a position that has a share price of about $10, and I tell them, well, you know, if your share is only $10, then your stop out needs to be 2 cents. And a lot of people don't understand that. They think, how can I have a stop out that's only 2 cents? You need to have stop outs like that. And so convert it into percentages. Whatever your position is, have specific levels where you are willing to say, okay, well, here is what I'm going to lose and no more. Have a limit, okay? And understand that there is no miracle, okay? Just holding on to your position and letting every day go by more and more means that you're getting further away from your entry, and things can only get worse. So the more your loser runs, the stronger your reversal has to be to even break even. And it's very hard to explain this to traders. Like I said, traders just see numbers, and it's very hard for them to kind of grasp this idea of how much they can lose. So I want to give you an example. Let's say you leave your house, and this is just something casual, and you want to go to a movie theater that is maybe about 5 to 10 miles away from your house. And you've never been there before. You were invited by a friend, and you have this set of printed directions. You don't have GPS yet, but you have these printed directions to get to this movie theater that's about 10 miles away from your house. Well, let's say those printed directions are wrong somewhere, and all of a sudden you find yourself lost. So you're on the wrong path. What do? Well, you can backtrack to a familiar area, okay? You can make a U-turn and try to backtrack and see if maybe you missed a road. That's what a smart person would do, right? Or you can be stubborn and keep going. You can keep going, but you still know how to get back. So you're still sort of in a safe zone, okay? So maybe you've exceeded about half a mile, but you still know how to get back. And at its worst, you know how to get back home, correct? You might not go to the movie theater, but you know how to get back home. Well, what if you're even more stubborn? What if you keep going further? Now you're at the point where you don't know how to get back, right? Your printed directions are completely useless because you've taken so many turns that you don't remember anymore. But the good news is that you still have gas in the tank and it's still daylight. Well, what if you get even more away from that? You don't know how to get back anymore. It's a lost cause already, and you know that. Okay? But what if you run out of gas? And what's going to happen? Well, it's still daylight, so I guess it's still good. You're still safe. But now you have another problem. You're running out of gas. Okay? Well, what if you just sit there and you're saying, oh, I ran out of gas, let me just park somewhere. Well, you wait, and all of a sudden it's nighttime. So now it's dangerous too. You don't know what area you're in. You've never been there. So trading is really like this. Traders just keep going when they're losing. They just keep going and they get to the point of no return. Their printed directions are useless because, they don't know how to get back to where they came from. And same thing with these charts. There comes a time in your trade when you just know you will never get back. You might get back there, but in maybe 3 years. And what kind of a career do you think you're building when you're in a trade for 3 years? You're not a trader, correct? You're an accidental investor. Okay? And so let's try to apply this to John's scenario. Okay? So the question is, what would it take for John to get his $25,000 back? Well, assuming he didn't leverage, so at least he was smart in that regard, and assuming that he now has $19,000 left. He lost 24% on that first trade, but now the next trade that he has to make him 31% in profit to get back to $25,000. Okay? Now, assuming he actually used the intraday 4-to-1 leverage, okay, which nobody ever should do, at least with this kind of irresponsible behavior, and now he has the $1,500 left. In order to make back $25,000, his next trade has to make him 1,571% in profit, even though he lost 94% on his first trade. And a lot of traders don't understand that. They think, well, I guess I lost 50% of my money. Now I need to make back 50%. No, you need to make more, because now you have half of what you had initially. And your money is the biggest tool you have in trading. If you don't have capital, you have nothing. You can't trade anymore. So you have to preserve your capital. So in other words, if you're losing all this money, you're also losing the opportunity to make this your career. Just from one trade. Think about it. So if you really want to translate trading into something understandable, translate every trade as having its own itinerary. Okay? Understand that when you're scalping, you're kind of just traveling around your neighborhood. Maybe you're walking around by foot, going down the street to your grocery store. When you're day trading, so now we're talking about holding a trade for maybe half an hour, maybe 2 hours, you're traveling within city limits. So maybe you're on a bicycle, or maybe you're still in your car, but you're within city limits. When you're swing trading, or you're maybe holding on to a position for a day or 3 or 4 or 5, you're driving within the metro area, maybe within your county or even state. But when you're investing, holding on to a trade for a couple of months, a year or two, you're getting ready to travel to other countries, continents. So what happened to John? John was given a 4-to-1 day trading power on margin. So initially, all he had the right to do is to either scalp or day trade. But his trade went against him. So he lost maybe about $100 or $200, and he was too stubborn to close the position within the same day. So what happened? His trade became a larger trade. It became a long-term swing trade, and actually even investment, because he held on to it for over a month. So what had happened? John wanted to go to the local movie theater, and he ended up going to a whole different country. So when I talk about this, I'm talking about expectations. So when you're scalping and day trading, be okay with getting a profit of a couple of cents. New traders don't understand that. They think, I'm going to get into a trade and I'm going to make $5 on this $20 stock in one day. No, you're not. You're not going to make 25% in a stock in one day. And so they get very greedy. They get very greedy and they hold on to the trade. And then when they notice that the trade is going against them, that they're already in another country and they're lost and scared, and they're probably in a very bad neighborhood and don't speak the language, they become fearful, and that's when they exit the trade, when they're losing. Okay? And this can be translated into trends, because every stock is in some sort of trend. Right now we are in an uptrend, okay? And so what happens if you go short, like John did? You need to understand that when you are trading against the trend, you have to get in and get out, because eventually you're going to get taken out. Think about it. If you hold on to a trade for 1 minute, what is your percentage possibility of making money? It's pretty good, isn't it? Because you're only holding it for a minute. But what if you allow that trade to go on to last for 30 days? You're going to get whipped out, because trends change. Maybe the trend is going to go against you. It's more likely the more time you spend in a trade, the lower your percentage winning rate goes. So understand this. Understand that you cannot have the expectation of going out to your neighborhood and buying something locally and then ending up somewhere completely different because you were too greedy and now are scared and need to get out. Same thing with trading. If you're scalping, expect a couple of cents. If you're day trading, depending on the position size and the share price, expect maybe $1 or so. When you're swing trading, expect maybe 2% or 3%. When you're investing, well, okay, maybe now you can talk about 5-10% expectations. But don't get into a trade at any time and say, I'm going to make 10% on this trade. Think about it when you're traveling. When you're going locally, what do you have to do? You just have to open the door and walk down the street, right? You're not very picky, correct? When you're trying to go to the grocery store, what do you have to do? You just have to get in your car, and that's it. Your car is in your house. But when you're trying to travel somewhere, you have to drive to the airport. You have to figure out a plan to, find a rental car, and you have to wait there and have a ticket ready. So it's a lot more complicated when you're traveling abroad, correct? Well, same thing with trading. When you're scalping, you're thinking about these short-term, very simple trades with lower expectations. But when you're investing, you have to find the best level, so you have to go to the best location, right? You have to go to the airport. So when you're investing, you have to go out there and find that level on a larger time frame. If it wants you to do so, you must wait for your level. Okay, don't just go out there and just say, okay, I'm going to buy it. No, if you have a certain level and that level is going to take 2 months to get there, well, that's when you enter the trade. So you need to develop patience, and you have to understand what your expectations are. And just to look at John's trade, okay, and to go back to these trends, John entered a short here where the orange line is. He was in the money, right? Okay, so he became greedy. Instead of covering his short around this area, closing it out for a nice profit, what did he do? He allowed the trade to go against him, and now he was in a trend that was against him, and he allowed the trade to go up, and he was riding the opposite trend, so he was losing. So understand, one, what your expectations are. Okay, understand how much you can get out of a stock and don't get greedy. And number two, understand trends. If the trend is going against you, close out the position and find another one that is better. Okay, there's always going to be trades out there. You don't have to be in one particular trade. You don't have to be missing out on trades. And finally, I was talking about stop outs. So take control of your expectations. Download the stop out mandate. And yes, I call it a mandate because you have to follow it. You have to follow specific stop losses, and download our PDF file at TradeTheseStocks.com. Go to education when you enter our site and download our stop out mandate.